All right, welcome back to the Deduction Desk. Today we have a very exciting topic. If you're paying attention to what's going on in the world, specifically from a political standpoint, there's been a lot of adjustments in New York and in New Jersey specifically, which is a lot of where our business transacts. One of the main points that have come up is taxes. And if taxes are changing, what opportunities do we have to actually move from one place to another? And we thought, you know what? Well, what does that actually look like? If we decided, hey, you know what? I don't like the new regime that's here. I don't like the governor. I don't like the tax standings that's going to change or the things that are going to change in 2026. I'm moving. What does that actually look like?
Yeah, I mean, I think well, first of all, I don't know anybody I've talked to that's actually
going to
leaving because of this, right? I think like the people who want to leave because they want to pay less in taxes, a lot of that happened during COVID.
Right.
And then we look and you see there's a lot of those folks kind of came back.
Yeah.
For a multitude of different reasons, which, at the end of this, we'll kind of go into what are some of the pros and cons of moving to some of these tax-free states that are out there. But most of the people that I'm seeing saying, New York is done, I'm never moving back, or I would never step foot in there, don't live in New York.
Well, that's true. Well, and I think we watch multiple videos and there's different ideas on would people move, would people not move. Yeah. And I think the topics of what we're talking about today, people aren't moving because of who's in office. Yeah. I don't think that ever happens that way. I think, yes, there's always going to be changes in taxes.
Maybe. I think during COVID, some people left because of shutdowns.
Well, and you can work remotely.
Impacting my life.
That's a whole different aspect, right? But from the concept of your network, the clients that you have, the people that you're working with, the area that you're in, more than likely,
work from home is going away.
Yeah, exactly.
For the most part.
So all of those cases don't give you a strong case to move because you don't like who the governor is and you think the taxes are going to be different. But in our conversation today, it's going to be, well, let's just say we did decide to move for tax purposes. And I think that's really the reason why people would move.
Yeah, there's people that it makes sense for, right? Like, and we're not going to litigate whether you should or shouldn't.
Correct, 100%.
We're not going to litigate.
Don't pick up and move to Florida because of this video. Please.
What we're going to talk about today is if you went through everything, you went through your situation, you looked at the tax consequences, and you want to know what are the proper ways of doing this if I'm going to go about moving to another state. That's what we want to talk about, right? We can start it off with basically, there is significant tax savings for a lot of people, right?
Oh, without a doubt.
I think if you make $1 million a year and you live in California, you're paying about $130,000 in taxes. If you lived in Florida,
that wipes away.
Pay zero, right? So that's $130,000 tax savings. Maybe you pay a little more in some hurricane insurance. Maybe you pay for your toll roads are a little more. Your property taxes are a little higher. Sales taxes are a little higher. But is it going to be $130,000? Definitely not.
Well, and it's important for you to look through those numbers and really make the decision if that's what you're going to do.
And are you going to be able to make that $1 million by moving?
Well, and also, do you want to live in Florida, right? Like the four key landing states, right?
This is Florida. As a guy
I used to live in Florida, and I moved back here, and I don't know if I would move back at least anytime soon. And that's just me personally. And some people have different preferences.
We have family in Florida. I think there's great parts of
My
Florida.
parents still live in Florida. I do like Florida. I enjoy it. Would I want to live there year round? I don't know. I mean, you have to take a lot of those things into consideration, right? Because the key landing states are Florida, Texas, Nevada, Tennessee, right? Those are the ones where people are moving to.
Washington.
Right. Do you want to move to Nevada for $130,000 less in taxes? Is your lifestyle going to be the same there? Is the weather 110 degrees in spring? Like all those things are things that you got to take into consideration. Also,
you got $100 million in the bank and you're making $1 million in interest on your checking account,
right?
And you want to avoid the tax.
$130,000 in taxes.
Yeah, sure. If you're making $1 million a year working, these are whatever. Regardless, right. These are that's not the point of this video. Even though we spend a lot of time talking about it already. The question comes down to, if I want to move, what do I have to do? Right? And the answer is, as simple as it sounds, is you have to actually move. Right. There's a lot of people we talk to who are like, oh, I'm going to spend, 6 months and a day, and then I'll be back up here, doing my thing, working up here, doing all that. It's like, yeah, well, that's not going to count. Right? There's a difference between your domicile and your residence. So where are you currently spending time? Where are you currently living is different than where is your home base, right?
Right.
Where is your doctor? Where is your kids going to school? Where is your mail going to? Where are you spending the majority of your time when it comes to earning money or working and all these things, right? And that determines your domicile.
Pets.
And your pets, right? That's a big one. Like some people, which I think it's crazy if you move.
I mean, I couldn't imagine leaving your pet somewhere else for 6 months.
Like,
yeah,
but, have a pet. You have
right. Well, yeah, I don't know how the snakes get fed, but like you look at it from that standpoint, right? And I think that's probably like one of the biggest ones, right? Is that, if I'm moving, am I bringing my pet with me, or am I going to pretend like I'm living in Florida every once in a while and actually come back just for 6 months in a day so I can get it? And I think that's what the IRS is trying to avoid.
Yeah, well, we've seen it where, there's been many cases, audit cases, which you can look up, where people have gone to another state because maybe they have some options vesting, right? And they leave their spouse and their kids home and they go and spend 6 months there in another state, or they have a project they're working on for work that's in maybe like Texas, for example. And they're like, I'm gonna go spend 6 months in Texas to be there for work anyway. And, honey, you and the kids, you stay here and we're gonna pay no taxes this year. Right. Doesn't work. It's a difference between where are you living and where is your home, right? And that's what you gotta keep in mind.
Yeah. So, that leads into like one of the bigger mistakes that people make, right? Is that there's that 183-day rule.
Yeah. So there's 183 days. That's, that's like to establish residency in the state. So if you spend 183 days in Florida, that means that you're a Florida resident. But you can still be a part-year resident other places, and you have to factor in some of the things we talked about before, right? You're renting a small studio apartment in Florida, but you have a 5,000 square foot home in Massachusetts, you're probably going to be considered a Massachusetts resident. It's about defensibility, and the same thing that we talk about all the time. It's like, can you defend this with a straight face that, yeah, I actually picked up and moved? And if you did, then yes, you can take advantage of the lower tax states.
Right. So, an example is you move to Florida, right? Yeah. 70% of your credit card transactions are from New York.
Oh, yeah.
So did you move or did your mail just move?
Audit. Yeah,
right.
Exactly. And auditing is easy on this stuff, right?
Right.
You check to see where your bills are going. You check to see where the person's credit cards are being spent. You check Easy Pass records to see how often you're driving. You can triangulate cell phones and see how many days you were spending where with your cell phone. So thinking that you're going to get around this stuff, maybe you're playing a catch me if you can type game. That's one thing. I'm talking about if you were to get audited and you don't have any of these things backing you up, you're probably going to have a really, really ugly penalty, interest, potential civil fraud issues.
And the key takeaway from this, right, is that you don't prove where you moved to, you prove that you left the old state. If you have the ability to prove I'm no longer associated with New York anymore, I'm no longer associated with New Jersey, that's how you should be handling it. Not, here's how I prove I live in Florida. My mail goes here, I have a dog here, I have, cars here, I have a couple of clothes here. Still doesn't mean that majority of your time spent in New York, spending money in New York, spending time in New York. That's a big key takeaway.
So Elizabeth, how do you prove that, right? How do you prove that you left, right? New driver's license, right? You gave up your driver's license in the current state, you established residency in the new state, you got a new driver's license. Registered to vote in a new state. Whether or not you actually vote, up to you, but you have to register, right? Florida has a declaration of domicile where you're, doing all the things related to your property tax abatements and all these other things. That helps prove that you're spending time there. The people you talk to regularly, your doctor, your dentist, your advisors, even sometimes your financial professionals. Yeah. Are you switching?
Accountant.
Yeah. Right. Are you switching your financial professional? Are you still working with them? You work remotely with people. We have people all over the country we work with. These things kind of help towards that. Have you updated wills and estate plans? Have you updated all of your tax return documents showing your new address and your new location, right? Do you change your vehicle registrations?
That's a big one, right? The vehicle registration and insurance, because depending on where you live and the level of insurance that's needed, sometimes it's more expensive in the places that you're moving to, right? So you say, well, I'll just keep the insurance in, New Jersey, but I'm just going to move to Florida because it's cheaper for where I live in New Jersey. Like that's going to be a huge red flag.
And giving up the things that are here, right? If you have a giant house that's sitting empty, it's like, maybe you got it like that. You could leave like a big property in Jersey that has crazy property taxes and is worth like millions of dollars and you don't need to use it. But if you're renting it out all year to a tenant for 365 days a year, probably goes a long way towards proving that you really don't have any sort of presence in Jersey any longer. Then there's also weird scenarios, like weird little quirks to all of this. Some of this has to do with like telecommuting. So New York has a telecommuting rule where if your company that you work for only has one location and they haven't updated your, let's say you move to Florida and you're a full-time remote person, but your company is based in New York and they don't register the company in New York and withhold payroll taxes in Florida, right? They continue to hold in New York, I should say, and not in Florida. You would basically be putting yourself in a situation where you'd have to prove that you're not telecommuting into New York and your taxes are not subject to taxable income in New York as a non-resident, but there would still be non-resident taxes you would pay on that income that you're earning. That's a very important quirk that we see a lot where, so somebody has some flexibility and they pick up and leave and they don't, or they maybe don't tell their work, or the work is just one office spot and they don't have another location that they can say you're working out of in another state, then technically you're still working in that state, you're telecommuting in, and you may have tax consequences of paying income taxes on what's being earned there.
Is that specific to New York, or other states have
There's
that?
Other states like that. There's other states like that. I know New York was a big one, and New York passed that during COVID when a lot of people
because they thought I'm going to move and then pay less than what I would pay.
Everybody was, New York was shut down.
Well, I think there's a lot of, I feel like a lot of businesses now are starting to come back into you need to be in the office at least a couple of days a week.
Yeah.
But the reality is there's a lot of companies that said, you know what, I don't even need an office and we can zoom in, but our main place is going to be here. And I think from a New York standpoint, if you see yourself zooming in every day, that's going to be considered you're still a part of New York, New York's culture. You're working with New York clients. Even though you live in Florida for 183 days, your driver's license there, your car's there.
You're conducting business. You have a
majority of your business is done in New York. Right?
And that's a big one for business owners, right? It's if you're conducting business in any state, you have to be very well aware of the nexus requirements. And that's something you should be starring and highlighting from this video if you do conduct business in a lot of different states, on whether or not you are required to file and pay taxes in those states.
Right.
And there's a whole video that can be done on those things, which, we're not getting into that because we're already off track. Right. What we want to kind of do is point out a couple of different things that you can look at in terms of examples of people who've had issues with moving and not following up on things, and to kind of help understand where the pitfalls can occur. The big one is not spending enough time in the new state that you're moving to. Maybe you're traveling around, maybe you're spending 90 days in Florida and 90 days in Texas and 3 days in California and then the rest of your time in New York, and you're under that limit and you try to get away with saying you're a Florida resident. It's like, well, you didn't hit the days requirement in Florida to be considered a Florida resident. So you're going to be filing partial income tax returns in all of those states. And that's something that we see people kind of falling into that trap. It's important to hit that days limit, and then also being aware of the fact that, and this applies more to business owners than a W-2 person, right? I think if you're a W-2 and you're working full-time out of your home in Florida, let's say, you probably get away with these requirements. It's more if you're a business owner, right? If I have my business that's set up in New Jersey and I'm living in Florida and I'm still meeting with clients digitally, or I have employees in New Jersey still, but I'm working out of Florida, how am I able to reconcile the two? And that's really where tracking your actual sales and your days and your work comes into play, not for the purposes of filing, but for the purposes of defending yourself against an audit. And if you're a business owner and you're thinking about leaving and going to another state, that's very important to make sure that you don't continue to have lingering business that's coming out of there. Real estate guys, this happens to all the time. We've had real estate guys that said, I can't, first of all, they're probably not paying much tax to begin with the last few years, but they still want to save a couple more bucks. So they're like, I want to get out of here, I want to move to Texas. Well, 80% of your rental portfolio is in the Northeast. So you're still earning income in the Northeast. You're still going to be paying taxes in the Northeast. You may be living somewhere else, or maybe your other income, your interest and your dividends and your capital gains would be exempt from those state income taxes, but the income you're actually physically earning in those states, you're going to be paying tax on. And that's something that you should be aware of and know before you do it. The other one that, is like the Logan Paul and his brother did this famously. A lot of other people that, are in the finance world have done this, and that's doing the Puerto Rico Act 60. Once again, This is a very complicated thing, and it's its own video, the Act 60 stuff. But general things to keep in mind, and just maybe more educationally of how it works, is you get a 4% corporate tax if you're a C corporation, right? Over all the income that you're earning. And then on top of that, you get a 0% tax on capital gain. So you have to apply for this status, you have to get a license for it, you have to have a company that's set up with that type of license, but it is a significant tax savings loophole, really, right? And once again, same thing, 183 days a year, can't do a day less. 2 years, you have to buy a home in Puerto Rico, like buy a home and live there. And you have to donate to a certain number of charities a year.
I think the bottom line, right, in this conversation is we're speaking to a lot of the people that are looking at their tax return and saying, what can I do to reduce this? And if it's state tax specifically that you're looking to tackle, you need to commit to moving somewhere else. Meaning your lifestyle is going to change, where you go out to eat is going to change, where your shop's going to change, where your driver's license, where all those things are going to change. And yes, you can obviously go back to the state that you want to go in, but you should never be moving to another state and trying to get around all of the bylaws to save the state tax. You should be saying, I'm committing to move to Nevada. I'm committing to move to Florida. And then obviously I can always come back every once in a while, but my new home is here. And that's how you do the best to avoid, a tax consequence or an audit that you're going to get in trouble for.
Yeah. I agree. I mean, look, you weigh it out personally if it makes sense for you.
Talk to your advisors, talk to your accountant, talk to your financial advisor. Obviously, if you own a business, look at it from your business standpoint. Yeah. But at the end of the day, if you're going to make a decision to move for state tax purposes, then really move, right? That's the point of it.
I agree.
And we actually have someone that actually, I think, successfully made this transition, and we'll be interviewing her.
She loves it.
Yeah, we'll be interviewing her in the next couple of weeks, so you'll be able to hear a live example of someone making that leap and
a lot of the challenges with it too, because she still does have a business.
Have a lot of stuff here. Yeah,
and there's consequences and it's complications, and it's not just like as easy as it sounds, where you can just pick up and leave and expect. There's a trail of income that continues to come in. Yeah, it sounds like it's a great, simple, easy thing to do. You just pick up and leave. But if you're trying to play both sides, it's not going to work out for you. So.
Right. Yep. Look forward to, look for that video obviously coming up in the future. Ideally, it's in Florida. We'll try to switch up the scenery a little bit. There, no desk, but we'll figure it out. Mm-hmm. And thank you guys for joining. Look forward to seeing you on the next video.
Yep.
Thanks.
Thank you.
All right. Awesome.
All right. That was good.
That was great.